Hello everyone. Our topic is all about strategy, evaluation, and control. We are Group 4. And before we discuss this topic, I'll be reading first the objective of this lesson. First is to understand the basic control process. Choose among the traditional measures such as the ROI or return on investment and shareholder value measures such as economic value added to properly assess performance and the use of the balanced scorecard approach to develop key performance measure and apply the benchmarking process to a function as an activity and understand the impact of the problems with measuring performance, and lastly is develop appropriate control system to support specific strategies. Next slide po. So, evaluation and control is consists of performance and activity reports gathered in the step 3 of evaluation and control process that I'll be discussing after this. So, as we all know that evaluation and control is the final major element of the strategic management, wherein it's a process of determining the effectiveness of a given strategy in achieving the organizational objective and taking corrective actions wherever required. To emphasize it, it is a process by which the managers monitor the ongoing activities of an organization and its members to evaluate whether the activities are being performed efficiently and effectively and to take corrective action to improve performance if they are not. So it means here in evaluation and control, it's very helpful kasi it makes us ensure that the strategy that being set out can achieve the desired result based on the objective of the organization. So the importance of the evaluation and control is that it guides for the implementation of strategy and it provides early signals of the obstacles in the process of strategy implementation, and at the same time it provides the future direction to the strategy. Next slide po. This slide, as you can see, is in the picture is the evaluation and control process. So the first step is to determine what to measure. Determining what to measure is very important because here a manager need to specify what implementation process and result will be monitored and evaluated, and the measurement must be found for all the important areas regardless of its difficulty. It means when it comes of determining a measure, it's very important to account for a higher proportion of expense or the greatest number of problems regardless of its difficulty. Yes, it's complicated, but you must prioritize what to manage because you cannot observe and assess every minute factor that might impact your strategy. That's why the strategies must mention the degree of tolerance limits between which the variance between the actual and standard performance may be accepted. The second step naman is to establish predetermined standard or establish standard performance. Here, standards are the detailed expressions of strategic objective, and standards should be set not only for output but also for the intermediate stages. So in this step 2, it must focus on questions like what standards should be set, how should standards be set, and in what terms should this standard be expressed. In the step 3 is measure performance. Once the standard are set, the next step is to measure your performance. Measurement helps compare the actual performance with standards. And measurement must be made at the predetermined times. When we say predetermined, it should be already established or decided in advance. And this, and in measuring the performance, it's operationally done through accounting method or yung pagme-measure ng performance ay ginagamitan ng financial statement like balance sheet, profit and loss account na piniprepared on an annual basis. And the step 4 is that does performance match standards? Here, you're comparing the actual performance with standard. If the actual performance result are within the desired tolerance range, the measurement process should be stopped here. However, if the performance does not match the standard of the desired result, it means you have to find the deviation. When we say deviation, it is the action of departing from an established course or accepted standard. And so here, there are two main tasks, which is noting deviation and finding the cause of deviation. When the actual performance is equal to the budgeted performance tolerance limit must be set. When the actual performance is greater than the budgeted performance, one must check the validity of standard and efficiency of management. And when the actual performance is less than the budgeted performance, we must pinpoint the areas where the performance is low and take corrective action. The cause of deviations may be external or internal, random or expected, temporary or permanent. And there are two main questions to focus upon here. Are the strategies still valid? Does the organization have the capacity to respond to the charges needed? And the last step is take corrective action, wherein it consists of the following: checking of the performance, where it includes in depth analysis and diagnosis of the factors that might be responsible for bad performance. Pangalawa is checking of standards. It results in lowering or elevations of standard according to the condition. And the last one is reformulate strategies, plan, objective. It means you're giving a fresh start to the strategic management process. So these steps are the various steps of the strategic evaluation and control process, and it determines better the performance standard if this is acceptable or not, and if it's not acceptable, of course, corrective action steps may be taken. Next slide po. So as you can see in the slide is the evaluating and implemented strategy. It is the application of the control process to strategic management. So as you can see, it is a sets of question, wherein after answering these proposed sets of questions, it helps to have a good idea of where the problem originated and what must be done to correct the situation. Because it is a series of questions where it provides questions to use in evaluating an implemented strategy. So to explain that figure, so for example, there the issue is that did the existing strategies produce the desired results? If the existing strategy does not produce the desired result, or if the existing strategies produce the desired results, means if your answer yes, then the conclusion would be successful strategy and result. If your answer is no, our existing strategies of the organization does not produce the desired results, means a set of questions will need to answer where the strategy is poorly executed. If your answer is yes, then a set of questions that need to be answered, which is where the strategies and the requirements communicated effectively. If your answer is no, then means you have poor communication. Same pattern to those to other questions, just following the arrow, and the conclusions will tell you what is the problem, and through knowing that problem, it could help you on what corrective actions you have to make. Next slide po. Measuring performance. Here, i-measure mo yung performance, which is the performance is the end result of the activity. So, gagamit ka dito ng mga measures para ma-assess yung performance based on the organizational unit to be appraised and the objective to be achieved. Like what I said earlier, measuring performance is typically measured in terms, for example, the profit, market share, return on investment. Next slide po. So these are some of the measures used for evaluating a corporation's or a division's ability to achieve a profitability objective. So these are the ROI and the EPS. ROI or return on investment, EPS or earning per share. When we say ROI, it's a popular profitability metric used to evaluate how well an investment has performed, and the EPS or earning per share, it's indicate how much money a company makes for each share of its stock, and it's widely used metric for estimating corporate value. So it means that these two measures is only for a profitability objective. So hindi siya sapat para evaluate yung mga additional objective such as yung social responsibility or employee development. As we all know that these two is only for profit. As we all know naman na profit is one of the major objective of a corporations. And ROI and EPS can be computed only after profits are totaled for a period. And it tells us what happened after the fact, not what happening or what will happen. So dito, kailangan yung organization mag-develop ng measures na makakapag-predict likely ng profitability. And this is referred to as the steering control because they measure variable that influence future profitability. For example, ng steering control na ginagamit ng retail stores ay ang inventory turnover ratio kung saan ang mga retailers o ang retailers cost of goods sold ay dinidivide doon sa average value of its inventories. And through that, na-measure how hard an investment in inventory is working. And so through inventory turnover ratio, it shows how many times a company has sold and replaced inventory during a given period. And this figure is important also because it allows business to frame financial footsteps. Next slide po. Behavior. These are the types of controls. Behavior, output, and input controls are the managerial means of controlling job requirements and expectation and end result in terms of company objective and production targets. So I'll start first with input controls. Input controls, these are the resources that are used in performance, such as knowledge, skills, abilities, values, and motives of employee, or even the educational background of employee. The behavioral controls naman, these are the activities that generate performance. It means it specify how something is to be done through policies, rules, standard operating procedures, and orders from a superior. For example of behavioral controls for a receptionist at a television station would include how to track the comings and goings of the personnel, what kind of questions and calls to send to which department, and how to operate a complex communication system, and what exactly to say when each call, in answering each call, and exactly how long to leave each call on hold. And the last one is the output control. Output control specify what is to be accomplished by focusing on the end result of the behaviors through the use of objective and performance target or milestone. It means it established to focus on actual performance. It means it describes the end results of the production attained through behavior. Next slide po. Companies need accounting system to track the costs of their operation. And two of the most commonly used system are the traditional costing and activity-based costing. The traditional costing, this is easy to use and inexpensive to implement, while this activity-based costing is it costs more to use, but it gives you greater accuracy. So activity-based costing is a recently developed accounting method for allocating indirect and fixed costs to individual products or product lines based on the value-added activities going into that product. And this accounting method is thus very useful in doing a value chain analysis of a firm's activity for making outsourcing decision. So, in other words, when we say activity based costing, it identifies all of the specific overhead operations related to manufacture of each product. Kasi not all product require the support of all overhead costs, so it is not reasonable to apply the same overhead cost to all products. Kasi yung traditional costing, lahat ng product ay entitled for overhead cost. Yung overhead cost, for example, is yung labor, for example, yung utilities, yung example nito yung electricity. So, this activity-based costing is more or mas prepared siyang gamitin ng mga companies. For example, consider company ABC that has 50,000 per year electricity bill. The number of labor hours has direct impact on the electric bill. For the year, there were 2,500 labor hours work, which in this example is the cost driver, and calculating the cost driver rate is done by dividing the 50,000 electric bill by the 2,500 hours, yielding a cost driver rate of 20. So ibig sabihin, si product XYZ is the company uses electricity for 10 hours, and the overhead cost for the product XYZ is 200 or 20 times 10. Next slide po. Enterprise risk management or ARM is a corporate wide integrated process for managing the uncertainties that could negatively or positively influence the achievement of the corporation's objectives. In the past, managing risk was done in a fragmented manner within functions or business units. Its individuals would manage process risk, safety risk, and insurance, financial, and other assorted risk. Ibig sabihin ng enterprise risk management, it is a process where you identify and address yung mga potential events na nagre-represent ng risk na may possible na magkakaroon ng negative na impact to the achievement of the organization through its objectives or dun sa mga opportunities and its competitive advantage. Next slide po. So these are the process of rating risk where it involves three steps. First is you have to identify the risk using scenario analysis or brainstorming or by performing risk self-assessment. I think it's very important to identify the risk using scenario is because you have to forecast or assume kasi uncertainty nga siya, hindi mo alam kung kailan siya mangyayari. And pangalawa, you have to rank the risk using some scale of impact and likelihood. I do believe that ranking risk makes more the business focus on ano ba yung mga risk na malapit mangyari o na mayroong malaking impact or may malaking impact dun sa business to the least. And pangatlo naman, measure the risk using some agreed upon standard. Next slide po. Next reporter na po. Thank you.
Okay, next is primary measures of corporate performance. Today's one simple financial measures such as ROI or EPS or return on investment and or um, earnings per share were used alone to assess overall corporate performance are coming to an end. Analysts now recommend a broad range of methods to evaluate success or failure of a strategy. So, the ROI and EPS were, wait lang. So, sila yung, ayan, were used alone to assess overall and analysts recommend broad range. So, primary measures of corporate performance measures the shareholder objectives, which in profit-seeking firms are almost always related to increasing owners' wealth. It is also the process of measuring how well an organization or business is achieving its desired objectives. So it is also the process of collecting and analyzing and reporting information regarding the performance or of an organization or business. So in short, it is the process of quantifying the efficiency and effectiveness of an action. So here are the primary measures. So first is the traditional financial measure. So, traditional techniques used by organizations are primarily financial measures such as contribution margin, the ROI, RI, net profit, and EPS. They focus on past financial performance rather than what manager are doing to create future shareholder value. So, they are the backward looking. All measures are short-term focused. Many organizations collect information which are only financial and operational data. In all organizations, one can find all sorts of financial and operational statistics. The organization can tell its overhead expenses, income, profit, and other figure from accounting system. Focusing only on short term is one of the reasons why organizations struggle to survive over the long haul. So this organization often do well for a year or two, but end up failing in long term. So, add ko lang dun sa in-explain ni Clara kanina. So, ang ROI or return on investment is simply the result of dividing net income before taxes by the total amount invested in the company, typically measured by total assets. Although using ROI has several advantages, it is also has several distinct limitations. So, for example, ROI fails to reflect time value of money, and it can be difficult to meaningfully compare ROI because investment will take longer to generate profit, such as net present value or NPV, or the internet rate of return, so or the IRR. So, the example of, for instance, an investment with a profit of 100, this is the formula or how to measure the return on investment. An investment with a profit of 100 pesos and a cost of 100 pesos have a ROI of 1. So, investment over cost lang. So, 100 over 100 is 1, or 100% when expressed as percentage. So, next is the EPS, or the earnings per share. So, EPS is the dividing earning by amount of common stock. It measures company earnings per common share prior to the conversion of any outstanding convertible securities. It is one of two methods for categorizing shares outstanding. The other method is fully diluted earnings per share. Next is the other measure is the return on equity. So it is the measure of financial performance naman, calculated by dividing the net income by shareholders equity. So, example, the company's asset minus no, the shareholders equity is equal to company's asset minus the debt. So it is considered on return on net assets, gauge of corporations' profitability, and how efficient it is in generating profit. So ROE is equals to net income over the average shareholders equity. So next is the stakeholder measures. So each stakeholder has its own set of criteria to determine how well the corporation is performing. These criteria typically deal with the direct and indirect impacts of corporate activities on stakeholder interests. Top management should establish one or more stakeholder measures for each stakeholder category so that it can keep track of stakeholder concerns. So one way to measure stakeholder engagement is to map your stakeholders across on internal system. A critical component of public affairs is relationship building with stakeholders through events, one-on-one meeting, emails, phone calls, and so on. So how do we measure if stakeholder engagement work you're doing is successful? First is to build an internal stakeholder tier system. Second is to track changes of tiers. And the third one is to evaluate the engagement that drove stakeholders to the new tiers. With this system, you can better measure and evaluate how successful your organization is at pushing stakeholder to be more engaged, and what specific activities or characteristics make an individual more likely to move to a higher tier of engagement. So the next one is the shareholder values. Because of the belief of accounting-based numbers such as ROI, ROE, and EPS are not reliable indicators of a corporation's economic value. Many corporations are using shareholders' value as a better measure of corporate performance and strategic management effectiveness. Value can be defined as present value and of the anticipated future stream of cash flows from the business plus the value of company if liquidated. So value delivered to the equity owners of a corporation due to management's ability to increase sales, earnings, and free cash flow, which leads to an increase in capital gains for shareholders. So there are two kinds of value added: the economic and the market value added. The economic value added is also known as economic profit. It aims to calculate the true economic profit of a company. It is used to measure the value a company generates from funds invested in it. And the other one, which is the market value added, it is the calculation that shows difference between market value of a company and the capital contributed by all investors, both bondholders and shareholders. On the other hand, market value of debt and equity minus all the capitals, claims held against the company. So MVA is closely related to concept of EVA or EVA, representing net present value of a series of EVA values. Okay. Next reporter, please.
Here's the balanced scorecard approach. A balanced scorecard is a performance metric used to identify, improve, and control a business' various functions and resulting outcomes. The concept of balanced scorecard was first introduced in 1992 by David Norton and Robert Kaplan, who took previous metric performance measures and adapted them to include non-financial information. BSCs were originally developed for not profit companies, but were later adapted for use by nonprofits and government agencies. Um, the example of BSCs or balanced scorecard is the corporations that can use their own interval versions of BSCs. Isa pang halimbawa is yung mga bangko ay madalas na nakikipag-communicate sa mga customer. Nagsasagawa sila ng mga survey upang masukat kung gaano sila kahusay sa kanilang serbisyo sa customer. Kasama sa mga survey na ito ang pag-rate ng mga kamakailang pagbisita sa bangko na may mga binibigay na tanong habang naghihintay sila. And meron silang pakikipag-ugnayan sa mga kawani ng bangko at pangkakahalatang satisfaction. Maari rin nilang hilingin sa mga customer na gumawa ng mga mungkahi para sa kanilang mga improvement or pagpapabuti ng kanilang service. Maaring gamitin ng mga tagapamahala ng bangko ang mga impormasyong ito upang makatulong na muling sanayin ang mga employees kung may mga problema or serbisyo o upang matukoy kung ano man yung mga issue na meron ang mga customers sa mga products, procedures, and services. The benefits of BSCs or the Balanced Scorecard allow companies to pull information in a single report to provide information into service and quality in addition to financial performance and to help improve efficiencies. This allows management to save time, money, and resources when they need to execute reviews to improve procedures and operations. Next slide po. Here you can see the balanced scorecard management develops goals and or objectives in each of four areas. So, sa financial, here as how we appear to shareholders, this would be a lot of financial ratios: total assets, turnover, return equity, return assets, net profits, gross profits, operational profits, quick ratio, all of those type of information. For customer, how they view us, This could come from customer surveys and how customers feeling about the brand, about the product, or about their experience. Next is the internal business perspective. What does the company excel at internally? What are their best business practices? And for the innovation and learning, this can be measure of how productive has research development been in developing innovate enhancements to the business. To the, to the business and learning can be looked at what type of training have the employee has gone through. Do they have taken advantage of tuition assistance training programs, conference, or things of that nature? Next slide po. Each goal in each area then assigned one or more measures, as well as a target and an initiative. These measures can be thought as the key performance measure. These measures that are essential for achieving a desired strategic option. So the balanced scorecard, we look at each of this as performance measure, and the companies would be the one who would set up and try and distinguish what is the key performance measures they want to have on their balanced scorecard, so they can construct their own balanced scorecard to their needs. Next slide po. Next slide po. Okay. So evaluating top management and the board of directors. Having the chairman's or CEO, it can be instrumental feedback, and we want is four key areas. So next slide po. Yeah. Chairman, CEO, feedback instrument. An increasing number of companies are evaluating their CEO by using a 17th item questionnaire developed by Ramcharan, an authority on corporate governance. The questionnaire focuses on four key areas. The first one is the company performance. This is a combination of both financial and non-financial aspects of an organization. Sinusukat nito yung mga aspect kung gaano kahusay na yung sinasagawa ng isang kumpanya ang kanilang diskarte sa negosyo at maaring tingnan upang matukoy ang mga lugar para sa pagpapabuti. Next one is the leadership of the organization. This refers to the overall field of a person or the leader strategically guiding and managing a group of people or the organization to meet a common goal. For three, team building and management succession. This practice ensures that skilled and engaged people fill key leadership roles. And for the last one, leadership of external constituencies. Next slide po. So the management audit. Management audits are very useful to boards of directors in evaluating management's handling of various corporate activities. They can audit and set up some protocols of how they want to rate and evaluate the managers throughout the company. This is the overall performance of management. It covers planning, organizing, coordination, control, etc. Management audit detects and diagnoses the problem and suggest various means to avoid and solve the problems. Management audits have been developed to evaluate activities such as corporate social responsibility, functional areas such as the marketing department, and divisions such as the international division. Next slide po. Okay. So the strategic audit provides a checklist of question by area or issue that enables a systematic analysis of various corporate functions and activities to be made that can help lead to their place and help achieve their particular strategy. Strategic audit is a type of management audit and is extremely useful as a diagnostic tool to pin pinpoint corporate-wide problem areas, and to highlight organizational strengths and weaknesses. It is very useful for pointing out huge problems and highlighting organizational strengths and weaknesses. A strategic audit is something that management of the company was gonna take a look at the company's operations, different things that the company does to get an up-to-date view of how they're performing. The difference between two audits is management audit can be helpful if the board has selected particular functional areas or activities for improvement, while a strategic audit can help determine why a certain area is creating problems for a corporation and help generate solutions to the problem. As such, it can be very useful in evaluating the performance of the top management. Next slide po, and next reporter please.
Next slides po. So, primary measures of divisional and functional performance. So, next slides po. So, responsibility centers. So, responsibility centers is a functional entity within the business that has its own goal and objectives, dedicated staff, policies, and procedures, and financial report. It is used to give managers specific responsibilities for revenues generated, expenses incurred, and or funds invested. So, nagbibigay daan ito sa mga senior manager ng isang kumpanya na masubaybayan ang lahat ng financial activity at resulta ng isang negosyo pabalik sa particular na empleyado. So we have five major types of responsibility centers. First is standard cost centers. This is a function within an organization that does not directly add to profit but still cost money to operate, such such as the accounting, HR, and IT departments. The main use of a cost centers is to track actual expenses for comparison to budget. So, second is revenue centers. Revenue centers is a distinct operating unit of a business that is responsible for generating sales. Halimbawa, maaaring ituring ng isang department store ang bawat department sa loob ng tindahan bilang isang revenue centers. Tulad ng mga men's shoes, jewelry, guitar shops at marami pa. So third expense centers. Expense centers or cost center is a distinct identifiable division or a unit for which the performance is measured on the basis of the cost incurred on that division or unit, and the managers are given and the cost responsibility on priority basis. So fourth is profit centers. A profit centers is a branch of or division of a company that directly adds or expect to add the entire organization bottom line. It is treated as a separate standalone business responsible for generating its revenue and earning. An example of a profit center is the selling of sales department. This business segment uses company resources like rent, staff salaries, and utilities to generate revenues by selling products to customer. So we have a transfer pricing. What is a transfer pricing? Transfer integrated. corporation estimated amount of products. Last one is investment centers, an investment expenses and assets and manage its own financial income statement. So using benchmark to evaluate performance. Benchmarking is a process that involves measuring the performance of your business against a competitor in the same market. This will give you a better understanding of your business performance and potential. So it used to measure performance using specific indicator. Cost per unit measure, product per unit measure, cycle time of per unit of measure or performance is then compared to others. So we have next slides po. So we have 6 steps to benchmark your business against your competitors. First, identify what you're going to benchmark. You can explore using qualitative or quantitative research efforts and align with your business strategy. Second is identify your competitors. Write down a list your competitors. Most businesses benchmark within the same industry. Identify the effective tactics that they use for their business and areas which their business is performing better. Look at trends. Look at the recent statistic to analyze any current trends in your industry, including how fast your industry is moving. So outline your objectives. After you're interpreted the result of the analysis and communicated them to the appropriate people, you need to come up with some goals for your business. So your goal should be concrete, attainable, in line with your business strategy. So fifth, develop an action plan of your objectives. Define the specific concrete action need to achieve your goals. So make sure each action includes tasks involved, person responsible to each task, date for each task to be complete. So last, monitor your results. Continuously action consistently applied. So
May I add some information? So, when we say benchmarking, for example, suppose that it takes 30 minutes to produce your product. Is that 30-minute or is the 30-minute measurement good or bad? So, the only way for you to know is to compare against other data. That's what we call benchmarking, such as or such the time it takes another organization to produce similar product. If another organization can produce the same type of product in less than 30 minutes, then you can use their time as a benchmark for measuring your own process and procedure. Thank you po.
thank you po. So international measurement issues. The three most widely used techniques for international performance evaluation or RROI, budget analysis, and historical comparison. In one study, 95% of the corporate officers interviewed stated that they use the same evaluation techniques for foreign and domestic operation. So first is current exchange rates. An exchange rate is the price of nation currency terms in other currency. So paano ito naging issue? Currency exchange rates that can impact merchandise trade, economic growth, capital flows, inflation, and interest rates. So second is inflation. Inflation is the rate at which price of goods and service in a given economy rises. When prices rise, because to increase manufacturing costs such raw materials and labor, inflation can develop. So tax law. A tax law can charge by the government on the income of an individual, corporation, or trust, as well as the value of unstated or gift. But siya issue, it does not generate enough income to support public spending. It is complicated to procedure unequal outcomes and slow economic efficiency. So third, so international transfer pricing. It determines how the worldwide income of a multinational enterprise is divided among countries of income tax purposes. When transaction occur within the firm, so paano siya naging issue? A transfer price is based on a market price in charging another division, subsidiary, or holding company for services rendered. Companies use transfer pricing to reduce the overall taxes burden the the parent company. So, reputation, reputation of profit. Reputation of profit is the ability of firm to send foreign earned profits or financial assets back to the firm's home country and hard-earned funds. So, is that strategic information system? A strategic information system is mainly developed to respond to the corporate world and many businesses. Initiative strategic information is used to gaining competitive advantage and formulating business strategy by organization. So it may provide a lower cost service or product that distinctive and primary focus on a high demand market segment. Or it may be innovative. It assists businesses in developing their company strategy, competitive strategy, and management choice, allowing them to obtain a competitive edge to save costs. Strategic Information System or SIS are information system help companies develop strategic information that enable them to compete
Tapos ka na, Gerardo. Enterprise Resource Planning, or ERP. From the definition from the module, the system provides instant access to critical information to everyone in the organization, from the CEO to the factory floor worker. And because of the ability of ERP software to use a common information system throughout a company's many operations around the world, it is becoming the business information system's global standard. So ERP, it refers to a type of software that organizations use to manage day-to-day business activities such as accounting, project management, risk management and compliance, and supply chain operations. So basically, it unites all of companies' major business activities rather, within a single family of software modules, providing instant access throughout the organization. And also, ERP systems tie together a multitude of business processes, and it enables the flow of data between them by collecting an organization's shared transactional data from multiple sources. ERP um, systems eliminate data duplication, and provide data integrity with a single source of truth. So the question is, how can these solutions manage organizations' day-to-day business activities? It is simply because enterprise resource planning systems are complete integrated platforms, either on premises or in the cloud, and managing all aspects of production based or distribution business. Furthermore, ERP systems support all aspects of financial management, human resources, supply chain management, and even manufacturing with your core accounting function. Next slide, please. Next is radio frequency identification or RFID. So, radio frequency identification is an electronic tagging technology used in a number of companies to improve supply chain efficiency by tagging containers and items with tiny chips. Companies use the tags as wireless barcodes to track inventory more efficiently. So RFID, it is a wireless system comprised of two components, which is yung tags and yung readers. And the reader, it is a device that has one or more antennas. It emits radio waves and receives signals back from the RFID tag. And yung tags naman, um, which is radio waves, it is to communicate their identity and other information to nearby readers. So in short, it is very useful for tracking inventories and products throughout the supply chain. Next slide, please. Next slide, please. Divisional and functional IS support or information system support. At the divisional or SBU level of corporation, the information system should be used to support, reinforce, or enlarge its business level strategy through its decision support system. An SBU pursuing a strategy of overall cost leadership could use its information system to reduce costs either by improving labor productivity or improving the use of other resources such as inventory or machinery. So itong decision support systems, it is a part of uh, a corporation that enables more informed decision making, timely problem solving, and it increased efficiency in dealing with issues or operations, planning, and even management. Next slide, please. So here, these are the problems in measuring performance. The measurement of performance, it's a crucial part of evaluation and control. And the lack of quantifiable objectives or performance standards and the inability of the information system to provide timely and valid information are two obvious control problems. And problem in measuring performance, in which nga this includes the lack of quantifiable objectives. um, uh, it means that it must reflect an amount of something for an objective to be quantifiable. So the performance standards and also the inability of the information system to provide timely and valid information. When we say timely, uh, valid information, when we say timely, it means providing valid information at the right or favorable time. Next, next slide, please. And next is the short-term orientation. So top executives report that in many situations, they analyze neither the long-term implications of present operations and the strategy they have adopted, nor the operational impact of a strategy to the corporate mission. So long-run evaluations may not be conducted because executives, first, they don't realize their importance. Second is they don't believe that short-run considerations are more important than long-run considerations. And third is they aren't personally evaluated on a long-term basis. And fourth, they don't have the time to make long-run analysis. So yung mga short-term oriented individuals kasi, they value tradition, social hierarchy, and fulfilling duties. So there is no real justification for the first and last reasons. If executives realize the importance of long run evaluations, they make the time needed to conduct them, even though Many chief executives point to immediate pressures from the investment community and to short-term incentive and promotion plans to support the second and third reasons. So there are evidence does not always support their claims. Many accounting-based measures such as EPS and ROI encourage a short-term orientation in which managers consider only current tactical or operational issues and they ignore long-term strategic ones. So next report po. Next slide na po.
Goal displacement. Displacement, confusion of means with ends and occurs when activities originally intended to help managers attain corporate objectives become ends in themselves or are adapted to meet ends other than those for which they were intended. In other words, goal displacement can also happen because of many reasons and many levels with the objective of ensuring the growth and prosperity of the company. Ang goal displacement tulad ng orihinal na tinutukoy ng Michels noong 1911 ay ang kababalaghan kung saan ang orihinal at madalas na radikal o idealistikong mga layunin ng isang organisasyon ay inilipat ng mga mababang layunin na kinakailangan upang mapanatili ang organisasyon at panatilihin ang pamumuno nito sa kapangyarihan. Goal displacement occurs when resources are used for a purpose other than for which the organization exists. The purpose that has replaced the original goals and values may be followed too excessively that this itself becomes end for the organization. Next slide po. Behavior substitution refers to a phenomenon when people substitute activities that do not lead to goal accomplishment for activities that do lead to goal accomplishment because the wrong activities are being rewarded. Employees often receive little or no reward for engaging in hard to measure activities such as cooperation and initiatives. However, hard to measure activities However, these easy to measure activities might have little or no relationship to be desired good performance. Therefore, people tend to substitute behaviors that are recognized and rewarded for behaviors that are ignored without regards to their contribution to goal accomplishment. Ang behavior substitute ay tumutukoy sa pagpapalit ng mga lumang gawin ng mga bago sa pamamagitan ng pagkondisyon muli sa iyong mga empleyado sa pamamagitan ng mga visual aid at experiential modeling. Next slide po. Sub-optimization. Sub-optimization refers to the phenomenon of a unit optimizing its goal accomplishment to the detriment of the organization as a whole. One of the common example of sub-optimization occurs when a marketing department approves on early shipment dole to a customer as a means of getting an order and forces the manufacturing department into overtime production. Production costs are raised which reduce the manufacturing department overall efficiency. The result might be that although marketing achieves its sole goal, the corporation as a whole fails to achieve its expected profitability. Ang sub-optimization ay isang pinababang antas ng output na nagreresulta mula sa isang hindi epektibo o hindi epektibong proseso ng sistema. Ang sub-optimization ay maaari ding lumabas mula sa isang pagtuon sa pag-optimize ng isang unit ng isang negosyo kaysa sa mga resulta ng buong negosyo. Next slide po. Guidelines for proper control. Top management should remember that controls should follow strategy. Unless controls ensure the use of proper strategy to achieve objectives, there is a strong likelihood that dysfunctional side effects will completely undermine the implementation of the objectives. Next po. The following guidelines are recommended. Control should involve only the minimum amount of information needed to give a reliable picture of events. Controls should monitor only meaningful activities and results, regardless of measurement difficulty. Number three, controls should be timely so that corrective action can be taken before it is too late. Strategic incentive management. To ensure congruence between the needs of a corporation as a whole and the needs of the employees as individuals, management and the board of directors should develop an incentive program that rewards desired performance. The following three approaches are tailored to help match measurements and rewards while with explicit strategic objectives and timeframes. Next po. Number one, weighted factor method. The weighted factor method is particularly appropriate for measuring and rewarding the performance of top SBU managers and group level executives when performance factors and their importance vary from one SBU to another. Number two, the long-term evaluation method compensates managers for achieving objectives set over a multi-year period. Number three, strategic funds method. The strategic funds method encourages executives to look at developmental expenses as being different from expenses required for current operations. Next po. An effective way to achieve the desired strategic results through a reward system is to combine the three approaches. Number one, segregate strategic funds from short-term funds as is done in the strategic funds method. Number two, develop a weighted factor develop a weighted factor chart for each SBU. Number three, measure performance on three bases. The pre-tax profit indicated by the strategic funds approach, the weighted factors, and the long-term evaluation of the SBUs and the corporation's performance. Yun lang po. That's all. Thank you po.
May I request po na pabalik po nung three types of strategic incentive management? Pabalik po lang ng isang slide. Yan. So, pag sinabi po nating weighted factor method, it's weight various performance measurement according to strategic objectives. So, dito, kumbaga dito, nire-rewardan mo yung isang units na may magandang performance or has an excellence performance, which here, it keeps employees motivated and productive. So, kapag high-performing ka, tinatawag ka nilang star, which minimeasures yon in terms of ROI, return on investment, cash flow, market share, and progress on several future-oriented strategic progress. And yung pangalawa naman ay tinatawag na cash cow. Ito naman yung performance of low growth pero strong yung competitive position. So, dito minimeasure in terms of ROI, market share, and cash generation. And may tinatawag din na question marks. Ito naman yung tinatawag na developing performance. So dito, in the measures in terms of development, market share growth with no weight in ROI or cash flow. And yung last naman is tinatawag na dog. If dog means low in all. So yung pangalawa, yung long-term evaluation methods, it compensate managers for achieving objectives set over a multi-year period. Ibig sabihin, for example lang nito ay, kunyari ako ay isang executive, at sinabi ko na dapat within this 5 year, kailangan ganito na yung sales natin. So, kapag na-meet ko yan within 5 year, yung objective ko na yon, doon, marirewardan ako. So, yun ibig sabihin ng long-term evaluation methods. Kinocompensate yung managers for achieving objective na sinet over a multi-year period. Pag sinabi naman strategic funds method, it is, tinatawag din siyang developmental expense kasi dito, ito yung other expenses na sinasubtract. It's difference from the current operation expense na kumbaga it difference dun sa expenses ng uh, na required for the current operations. Ito yung binabawas na kung saan kapag high performing ka, for example, pag ikaw ay high performing unit or star, so for example, kumbaga hindi lang for example nakapag-generate ka ng gantong amount, pero yung nakakapag-invest ka pa ng for example ng ganitong amount sa unit mo for its continued growth. So yun yung strategic funds method. Ibig sabihin, binabawas yung it is an expense kung saan binabawas para magagamit yung pera na yon for strategic funds na pwedeng i-invest ng isang unit for the continued growth of its units po. Yun lang. Thank you.